fancy. Actually, I wanted to mention this. Yeah, liens and beans. I'm going to get to that in just a minute. But just I'm reading through the comments here online, and I got to point out, Melissa Bachman, I really don't know why we don't have babysitters, Jen, at KWRC. Come on now. Melissa, I hear you, and I know with all the babies that KWRC is having, maybe we should look at that. Anyways.
You can pull together, get a nanny or something.
Yeah. An in brokerage nanny. Is that a thing? That should be a thing. Maybe it's a thing. It's our new value proposition. Yeah, good stuff. Okay. Liens and beans, Gare, what do you mean? First of all, I had to laugh at that image. You know, when you ask AI to create something for you, you never quite know what you're going to get back. This was it was passable. As I mentioned, in one of the chat groups the other day, the comment came up along the lines of, how do I verify what's registered on title or the mortgages that are on title so there's enough equity to pay out not only those mortgages, but also any other liens and then commissions? Well, that's a big conversation right now, because there will be moments or times when you pick up the phone right now and people are selling, people for all different reasons. We know that. And what we're feeling and seeing right now are people are also selling for financial reasons, right? They're feeling that pinch. And sometimes we're getting that phone call sometimes too late in the game. And I know, as example, you know, Stuart Coleman, one of our favorite realtors here, who has a lot of power sale properties, that's the end result, right? So how do we, sorry, Stuart, how do we get the phone call before Stuart gets the phone call? Right? So that's where, to what Abe was saying earlier, if you're not talking to your clients, who is? Somebody else. Many else's, right? And we need to be in conversation with our clients so we can walk them through this process. Okay, this is great, Carol. How do we protect that? Well, let's pull title, which we can do very, very easily. And I'm going to show you how to do it. And then more importantly, I'm going to show you how to read the register. That's really what we're pulling here, is parcel register. That's kind of like the boring legal terms, but we pull title. We pull title. We should always, when should we pull title? When we're at a listing or we're looking at taking a listing? The answer is always. Now, we don't always, and I think this is good coaching moving forward, or I should say good practice, we should spend the $36 as well as the $5 or $6 for square footage to pull to see what's registered on the property. Because we'll get into it, and I think even Stuart commented on it, was it will show you that something's registered, like a rental furnace, but it may not always show you the amount, and it definitely will not show you the buyout amount. And sometimes, we've all been there, clients forget that they're renting, or it's a rent-to-own furnace, and it can cost $20,000, $30,000, $100,000 sometimes in crazy cases. So it's always good practice to pull that. There has been certain times where I've pulled it just based on my conversations, because I was a little nervous of what situation I was getting into as a listing agent. We should always verify the title, and Realm does a great job of doing that for us, but it doesn't pull to see what's registered on title. Those are two different things. So how do we do that? Okay, you know I got to go to Realm. You're going to click at the very top, that little dice at the very top there, and then you're going to look for GeoWarehouse. You can see it right there, or you can search for GeoWarehouse. You click that, it'll take you right into this for the property that you're on, or you can search the property here. This is actually a property that I own in Barrie. You're going to scroll down, and then you're going to see reports available for purchase. And you can see here that I've circled the second one. The second one here, I need glasses. No, here they are. Imagine that. It specifically says title checks plus parcel register. That's what we're after. And you're going to click that, and it's going to take you to this page, your checkout page. And towards the bottom, you want to make sure that the charge mortgage option has that blue check. Otherwise, you're not going to get that information. And then just below that is the payments. It's roughly $36 here. Do it. That could save you so much headache in the future. Okay, so Gare, how do we read this? This is the type of document you're going to get. And I know this is a little small. The next one I'm going to zoom in a little bit. The very top left-hand corner, this was an actual one that I pulled for a home that I sold a few years ago. That's why it's been redacted, so I've removed some of the stuff. And then you can see the pricing, the transfer, where that first $750,000, if everyone can see that right in the middle, and I made up the name. No, I didn't. It was literally Bart Simpson. He is the registered owner of that property. Stop giggling. This is important. Then the lien that's on the property was $562,000. Now, this is years later. That date was 2017 that mortgage was registered. What I want you to point out is it doesn't give us the current balance. It'd have to be updated every month. That's not going to happen. But we know that at that time, 7-8 years ago, in 2017, there was a mortgage on it at 80% of value or 75% loan to value, something like that. It also, as you can see here in the right-hand column, tells me who that mortgage is owned by or is carried. This is Home Trust. Now, there's nothing wrong with Home Trust. However, you might just want to ask a few more questions with some of those lenders like Home Trust. Nicole, stop laughing at me. Stop smiling. Because Home Trust is typically a lender that will lend to more difficult borrowers. Is that a fair way to say it? She gave me the thumbs up. And then I'm going to put myself in that category as well, because I've had mortgages from Home Trust, because they are great at offering people with many mortgages another mortgage. Right? Many of you know I own investment properties. When you get to a certain amount, your options get smaller and smaller. However, just a little heads up on who that mortgage is. It'll say TD Canada Trust or anyone, CIBC. It'll say anything like that. And it'll even say some other information, like any of that lender. And then there are times, I don't know if we have it here in the next page, you might see a registered number. That typically means, right, Nicole, perhaps a private lender. So just kind of keep that in mind. Or there's something extra going on there where you might need another couple of questions. Okay, this next page. This is what it looks like. And then the next page, I'm going to zoom in and make it bigger. So there's a transfer here from the previous owner to the new owner. There's a mortgage on the property. There's some liens on the property. This is an example right off of GeoWarehouse. How do we read this? Well, let's go to this page here, because that actually helps us out here. In the very top, not that one. Let's go back one. In the very top, I'm going to see if I can zoom in. Obviously, it gives us the current owner's name, Mike Anderson, as this example. Sometimes, and I don't have all clarity on this, it'll tell us how this property is owned. In the previous one, it was joint tenants in common. Remember all that, learning that way back then? We're not really concerned with that. What we are concerned with is all this information underneath here. So there's the first transfer. The second one you can see was transferred for $996,000. So that's the sale of the property in 2016 there. And then you can see there was a charge on the property the same date. So we got a mortgage on the property for $700,000. Can you see what happened in 2019, a couple of years later, for $300,000? Nicole's saying yes. So most likely a second mortgage for $300,000 got put on that property, which means there might be $1 million worth of mortgages on that property. Now, we've had some mortgage pay down, I would assume, but it wouldn't be, it might be 100, no, it wouldn't be that, probably about $75,000 at best at the beginning there. But these are all those questions that you have to start asking yourself and asking the seller perhaps. The next line here where it says $13,300, that's a registered company. That's where we got to start digging a little bit deeper. And what this is saying here, and is exactly it. So it gives you a little brief. When you order one of these, it won't have all of these nice little green tabs. This is just for us today. What that's saying here is that $13,000 is perhaps a furnace that's on a rent-to-own program, or something that's on a rent-to-own program, okay? So that's important to take note of. You'll also see perhaps in that same line, it'll come up very similar, is perhaps a construction lien on the property. We've seen that in the past, right? Where somebody goes and works on the property, doesn't get paid on the property, and then puts a lien on the property for the amount of that quote in the invoice. Okay, that's where this shows up as well. Or it might just say, with no dollar value, this registered company has an interest in the property. So that might come up as well. And who knows what that is? Who knows what that is? The last one here for $9,100, and this is one that we're going to talk about in just a moment. Everyone can see that? The Minister of National what? Revenue, the CRA, our good friends, our good partners. They will also put things on title for non-payment of taxes and likewise. So it's really, really important to not only be able to understand how to read this, but to also figure out what's going on with that home and that seller, right? We could go look at probably 50 or 60 sellers today, and it won't be, we won't have a scenario like this. But there's always that one, right? And if you don't know how to do it, you could be, that might be something you walk away from. Well, what the purpose of this is just to provide a little insight on how to purchase that parcel register, how to read it. And if there are times where I'm looking at this, and it might take me 3 or 4 times to read it to really understand the flow. Because the other weird thing too is, and I think this is just a quirk in it, sometimes the dates don't line up. So now you got to go back and forth and move things around and do some math yourself there. So you got to do that. Should you need to pull one, go pull it. Should you need a little assistance in reading it and analyzing it, I'm happy to do so. Give me a call, and I'm happy to help you with that. Or of course, talk to Nicole, and at the very least, talk to your favorite solicitor that'll walk you through that as well, right? But that's how you do it. Okay, let's move on. Let's move on from that. Let's talk about something else that comes up from time to time, not so much around, we'll call it the metropolitan areas, but perhaps in cottage country. And I'm bringing this up too because maybe out in the Wyerton area where Terry Hastings' team is, they may see this. There is more and more people talking about tax sales because we just talked about people not paying their taxes, and that can show up. So how does a tax sale happen? I'm not going to spend a lot of time here, but I do have a story to go along with it. Jen knows all about it. And a tax sale is simply where, and I'll use the town of Newmarket as an example. The town of Newmarket has the right to sell a property within its town. Why? Because the owner has decided not to pay the property taxes. And usually it's after about 3 years is when they start this process. It can go much longer than that as well. So that's it, starting to come more and more. We see all that in cottage country, especially on vacant land. But we are seeing it just pop up around, those tertiary markets a little bit. What happens though, and that you can see the note here, is when there's a tax sale, all the liens on the property are removed. So all those liens, all those mortgages that we previously saw, or any sort of other lien on the property, they don't get paid out. All the town's concerned about is recouping their property tax, their loss of property tax. Except for our favorite partners, CRA liens. And why is that important? Well, let me tell you a little story time. So some of you that have been around the Newmarket area for an awful long time meaning back to 2009, there was a very nice large property in Newmarket that went up for sale as a tax sale. And I got really excited. Because it was in a neighborhood, Stonehaven, as some of you might know, that community. And I'm looking at this and I'm thinking, I gotta start asking questions around this. This is pretty interesting. And what happens is you have a public tender, as you can see here, and there's a minimum bid. And that minimum bid will cover the property taxes as well as any legal costs that the town may have to dispose of this property. And in this case, it was $64,000. Can you imagine buying any sort of property in Stonehaven at any time in our lifetime for $64,000? No. You get pretty excited, right? Of course, it's a closed public tender. So you submit your offer in a sealed envelope and that's it. And obviously it was going to sell for much more than that. Fair market value at the time was probably about $650,000. Why I tell this story is because I thought to myself, I'm going to pull the title and I'm going to see what's registered on the property. So I did. No mortgage. Excellent. CRA lien. Ooh, CRA lien for $404,000. So there were people I know of in this area looking to purchase that property and provide an offer on the property that did not have that information. So it's important to pull that information. Now, what that means is the winner bid of that property would have to pay the $64,000 as well as whatever money they were providing, maybe it's $300,000-$400,000 or more, as well as the $404,000 CRA lien. So if you didn't have that information, you could have overpaid for this property by a few $100,000. Now, the story, I got a boring end of the story. Obviously, I walked away from it from that perspective, but it was a good learning opportunity. The owner of the property decided to pay the property tax, and I don't know what happened with the CRA lien. I have no idea, but they brought the property tax up to date, which meant the town had nothing to do with it anymore, okay? But obviously, you need to be able to prove that you can do your due diligence and do the due diligence, right? These are important things to do. We're not gonna see this. Why are we not gonna see this in our larger markets? Why wouldn't we see this? Here's my thoughts on it, is because our realtors like Stuart are going to get the property before the town does, right? If there's a mortgage on the property, there's no way, shape, or form that bank is allowing that property to go to a tax sale. That's why we don't see them around this area so much. But as we get out into those smaller markets where perhaps they've owned the property for many years with no mortgage, that's where you start to see it. So if people ask you, Garrett, like, just tax sales. I saw a webinar on how to buy tax sales. Well, yeah, I'm sure you did, but where those are happening are outside those tertiary markets. Like, what's even less than tertiary? I can't even think of it. Even like way up north, that type of thing. So that's why we don't see it down here as often. Good stuff, good stuff. Okay, liens and beans.